Hey, so I want to talk about Aehr Test Systems. Ticker symbols on the screen, AEHR. They recently had their Q4 earnings released, so we're going to start with that. Then we'll cover their next year guidance. Then we'll go into just news, what they've been up to. Last time we checked on Aehr, they were trading at $42 on June 14th. Now all of a sudden it's at $49, so we'll get the story behind that. Uh, and then we'll close out with the technical analysis just to see is now a good time to buy at 49 or what is a good time to buy. So let's just again start off with their earnings. So here we have the income statement. A couple things highlighted. We have the net sales. This quarter was 22 million. For the full year was about 65 million. Our first test is gross profit. For the quarter, it was up about 11 million. For the full year, 32. So about 52% in gross profit. So I like that margin. Income from operations trickles down to 5.5 million for the quarter, a little over 13 million for the year, which equals about 25-ish%. So again, a healthy chunk there. And then ultimately net income right around that same ballpark. Some things get added, some things get subtracted. This quarter was about 6 million. For the full year, 14.5 million. So again, we're staying in that ballpark between about 25-30%. Again, nice solid number to bring all the way down to the bottom. In terms of earnings per share, we got 21 cents. For the full year, 50 cents. So it looks like healthy growth in the back half. It looks like last quarter was 14 cents. Now all of a sudden at 21. That's a healthy jump. Let's keep moving on to the balance sheet. A couple things to point out. I guess let's just start with the current ratio. So we have current assets at about 89 million. Current liabilities, only 16 million. So they're crushing it. They have so much money and assets. It kind of makes me wonder, like, what are you gonna do with that? Because clearly their current ratio is like, uh, I don't think it's four. It's more than four. It's close to like 5 times their liabilities. So, and the fact that I'm seeing so much cash compared to their accounts payable, uh, it kind of just makes me wonder what are they going to use that for? Because that just seems like a lot of cash to just be sitting there unused. Uh, but we'll see how that plays out. Property and equipment, that boosted about $1.5 million, which is a healthy jump for them. Last quarter, they were at 1.2, so now to be at 2.7, that's a healthy jump. Accounts payable, that nearly doubled. Uh, Maybe that's why they have so much cash. They need to pay some of that off, but still, the ratio speaks for itself. They have tons of cash, so no worries there. Customer deposits, we've seen a nice jump there, so they have backlog. It looks like about 2 million in terms of short term. No real mention of the long term in terms of customer deposit, but uh, a healthy jump there, which that one's kind of that's a better situation. That means people made orders and now they just need to fulfill those, which I would assume they will do that. Moving on, so here we just have a quick wrap up with some notes that I took from just their earnings, their financial statements, and then the earnings call. So just to start up at the top, so again, focusing on the results, their sales were a record 22 million, which was up from 20 million. Net income was a record 6.1 million, which trickled down to earnings per share of 21 cents. This is a big number. So backlog as of May 31st was 24.5 million. Their effective backlog, it's now including from the report date to the issue date, it built up all the way to almost $40 million in backlog. So again, a good problem to have, but of course you don't want that to be such a large number that you can't catch up because you might lose orders that way. But as of now, that's great. For a company that made about $60 million in revenue to have 40 million in backlog, that's a nice thing to see for a company this size. Cash, again, cash equivalents as of May 31st, it was actually at 48 million and up from 31 million from the last quarter. From the last quarter? Or 30? Yeah, that's right. Okay, so it's 47. It was up 31 from last year, I mean. So for the physical year, net sales 65 million, up 28%. Net income was a record 14.6 million, which would be 50 cents earnings per share, up 54%. Healthy jumps. We want to see those continue to climb. So some of the notes we pulled here is the products provide complete solutions for semiconductor manufacturers for high volume test, burn-in, and stabilization of semiconductors, such as those used in electric vehicles, electric vehicle charging infrastructure, photovoltaic or solar power conversion, and data and telecommunication infrastructure. A significant new market opportunity for test and burn-in for semiconductors such as silicon photonics devices used in optical input-output for data farms, computing, and artificial intelligence markets. So that just gives us a little more in-depth of what is Aehr producing and what markets are they hitting. And we like a lot of those markets. That's why we started following this one fairly recently. So again, we're trying to build our knowledge on this one. Next, we have the addition of this latest customer. We have significantly expanded our customer base by adding a total of 4 new silicon carbide customers this year. These customers are already ramping or plan to ramp our products into high volume production using our multi-wafer test and burn-in systems. So again, a new revenue stream, the silicon carbide, and it kind of alludes to it. I think we'll touch on it when we get to the news aspect, that they picked up a very big customer. But continuing on here, market forecast for wafer level burn-in products is significant. So this William Blair estimates that total available market for wafer level burn-in products for silicon carbide alone, so that's just one revenue stream, will be 400 million by 2027. We believe, this is the CEO saying this, we believe Aehr has the potential to capture a significant portion of that market based on the level of silicon carbide engagements we have with customers across the globe. Again, they don't have many customers, at least the way they allude to it, that they have like 4. I guess actually it says they added 4, so I don't know how many in total. But again, this company, on the left side, you can see net sales 65 million, and that's hitting all their revenue streams. Well, this one stream that they're starting to pursue maybe a little more heavily, or at least they're bringing it up more in this piece, they're saying that one stream alone is 400 million. So I don't know, it didn't go into an exact how much they make per segment, but if we just say 10 million, we could even say 30 million. That the total addressable market is very big for a company like this, and then to couple that with they believe they can capture a significant share of that, we could easily see net sales jump very quickly for this company. And that's good for where it is now. If this was a different company like an Intel or just a larger company, $400 million, we would not be this excited about it. But for this company, yes, that is very positive. Here we have just some breakdowns of what analysts are seeing, but here highlighted kind of towards the top underneath my picture here, that's their guidance. So they're expecting total revenue to be at least $100 million, representing growth of over 50% year over year. GAAP net income of at least 28 million, earnings growth of greater than 90%. So they're projecting to go from roughly 65 million in revenue to over 100. It looks like right here, highlighted kind of in the middle, analysts are projecting 102. So that kind of fits what they're projecting. We'll see if that evolves over time. Current quarter, they're projecting 19. So already that's on the low end. but you can see next quarter they're saying it's going to jump up to 23. So if that continues, yeah, they should definitely hit over 100 million. But they would need that type of growth. We'll see, but very exciting. Even if they were to miss, it's overall they're going to beat last year. And because they're so small, we want it to grow faster. Overall, very positive things here. In terms of earnings, you can see actual was that 23, so they beat by a little bit. They were expecting 21, they got 23. This current quarter, they're expecting 16. For the full year, they're expecting $1. And again, for this past year, for them that just ended, they were at 50 cents. So they're planning on doubling earnings per share. So yeah, once that actually comes out, we'll be able to confirm these numbers and see if things are going as planned. But very exciting to start off this coming year for them. So some news. We kind of alluded to it. Aehr received a $13.7 million in follow-on orders for Fox WaferPak contractors, burn-in test, and stabilization. The wafer packs are scheduled to be delivered over the next 6 months, and I believe these wafer packs are linked with those silicon carbide type sales. This is one of those customers. A big acquisition because, again, $65 million for the full year. They're saying this one customer is essentially making up a quarter. So that kind of nervous about that, because if this one customer were to all of a sudden change vendors, that'd be quite a hit for them. But I feel like Aehr is still in that position where they're so new, they want to impress, that they wouldn't allow that to happen. But that's always going to be a concern with a company with customers taking up that much portion of revenue. So we'll see how that goes over the next 6 months, especially. We'll see if they follow through. If they do, it should be great. And if anything, they can build on that. And then the last piece of the news before we switch into technicals is Aehr recently joined the Russell 3000. So normally when things like that happen is we'll see a little bit of a pop from stocks because they're in some sort of index or ETF fund that more people just buy into. So whether they realize or not, people who buy that Russell 3000, they're buying a small portion of Aehr. And so if anything, that's going to help the stock price. But let's now pivot into the stock price. So here on the screen we have Aehr, and actually let me get this. Okay, we're good. So again, the last time we looked at them was on June 14th. So that's roughly here. It looks like I said 42. So maybe it was somewhere in here. So it looks like it was at the top of this red candle, was roughly June 14th. Since then, it kind of traded sideways for a good while, about a month. Ultimately here, July 14th, was that when earnings came out? It must have been roughly that time. Yeah, that makes sense. So earnings must have come out right around here, like mid-July. So a big pop. That also could have been about the time we got that news about that new contract, all kind of lined up on the same week, roughly. So a big pop, and kind of trading up, but sideways at the same time. Let me do this. I think that'll help us. So I guess maybe let's just start with the note that we left ourselves. We noted it was in an uptrend since July of 22. So that's the start of this purple uptrend. That is still intact. We can keep that in. Meets expectations but dips. So that's, I think that was back here when they released their third quarter. They dipped. Ultimately, here they are climbing back up. I'm just going to remove that line, and we're going to say something like YR24 expects like 100 mil revenue, which is nearly double. Or I guess, I think they said it's like 50% really, because it's 60 to 100, which is nearly 60% growth. Okay, so for this one, I'm actually going to put in to buy dips, only because of how positive everything seemed, and to find a small company like this could be big down the road. So overall, I had it marked red as I didn't like it at the time at 42. Again, looking back, it was at the top of the channel, and that was the reason. Even if we would have caught this one at the ideal price, which was right before that pop, the lowest it got was 38. And even at 38, at least before, when I didn't know that much, I don't know if I would have said that was a buy. But I guess let's just start updating this. So we're now trading at 49. The buy points I had were 1, 13, and 32. So those are obviously going to get updated like crazy. We had one down here because before, I would say 2021, that's where it was. We're going to get rid of that. 13, that was the first time where I noticed it passed 13, tried to pull back, found some support there. So we're probably going to remove that point also. And then we had 32. 32 was right in here. I'm not sure about 32, why that was chosen. But I'm just going to go ahead and remove all three of the buy points I had. And for just going forward, it looked like it found some support at 38. So I'm going to put in 38 because of the uptrend and where we are. Considering this week is over, looking at next week, it would be at 37. So I'll just keep 38 in there. Looking ahead, I would estimate I'm probably going to look at this in about a month. And still, so we'd be at about 39. So I really just have the one buy point. 38 would be ideal for multiple reasons. That would be the bottom of that uptrend for next week. Going out even a month ahead, it'd only be at like 39 to 40. So 38. And we also saw some support here at 38. All kind of adds up. So 38 would be my ideal at this moment. Resistance, because we're still in this uptrend and we're actually at all-time highs. Next week specifically would be about 47. Projecting ahead a month would be roughly, what do we have here? Roughly like 50. So I'll just say 50 for the resistance. Yeah, I think I'm good with that. So right now, yeah, I still don't like it, so I'm going to leave it red. I am going to update the date to today. Earnings is probably not until October. And that pretty much does it. So not much changes on the technical front. But I guess one last thing before I do the quick recap. Just forecasting ahead here. That's where I would expect it to be, somewhere in this range. We're at the top, so even short term, it doesn't seem like it's a great deal right now. But hopefully long term, it does continue upwards and they keep hitting their marks. But yeah, so just a quick recap. So we have Aehr down here. It's marked red because I feel like that's just not the best deal right now. Purple, that notes that I bought a share near that date. I just didn't update this before. But Aehr, moving on, currently it's at 49. Buy point for me is 38. Resistance is at 50. Again, it's right there. Updated the date, earnings, probably looking ahead. And then our note, in an uptrend since July of 22, still intact. We want to buy the dips on this. Also noting that year 24, they're expecting 100 million plus in revenue, which is nearly 60% growth. So yeah, we'll just keep following this. If you have any questions, or if you have a different opinion, you want to share what you're seeing from your angle, by all means let me know in the comments. For any questions, I'll do my best to answer them. But that wraps this up. So please like, subscribe, and I'll see you on the next one. Bye.